headline that is making news is about SVB. Let's get in the latest update because the US FDIC has gone ahead and plugged all Silicon Valley's deposits and a substantial part of the assets from the now shut to newly created Bridge Bank. Now, Tim has been made the CEO. To add some context to for our viewers, a Bridge Bank assumes certain liabilities and assets of the failed bank to bridge the gap between the failure and the time that the regulators take to stabilize the situation. Now, in more updates, HSBC's UK arm will be acquiring SVB's UK arm for a sum of £1 to protect the deposits as well. Now, US President Joe Biden has reassured people that the country's banking system is safe in the wake of a sudden collapse of SVB. Added that the taxpayers will not bear the brunt of the fallout. Let's go across and listen in.
No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. The management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Investors in the banks will not be protected. We must get the full accounting of what happened and why those responsible can be held accountable.
And staying with the Silicon Valley fallout, then shares of Charles Schwab saw steep cuts as the lender defended its portfolio amid a flaring financial crisis in the US. The Texas-based financial company closed the session 11.6% lower, adding to the 23.3% cut incurred earlier. Now, amid the trading session, the stock was on track for its worst single-day sell-off ever. First Republic shares too bled and fell as much as 67%, even as the lender tried to allay concerns over liquidity amid the SVB failure.
And let's keep all eyes on the key macro data from the US, that the all-important CPI figure expected later today. Inflation in the United States may have cooled off in February, but the economists still vary. Now, according to the street estimates, the figure expected to witness a 0.4% month-on-month rise or a 6% from the previous year rise. Let's move on and talk about Pfizer. The global pharma giant Pfizer announces acquisition of American biotech player Seagen in $43 billion deal as the company looks at expanding its cancer portfolio. Now, together, the companies seek to accelerate the next generation of cancer treatment, antibody drug technology coupled with Pfizer's expertise and capabilities.
And China's new Premier Li Qiang says key focus of the country's policymakers will be on growth with special attention on need for housing, income, education and healthcare. Going forward, the focus will be shifted towards delivering a life of better quality for the people, added Qiang.
Leaders from US, UK and Australia have unveiled details for their next generation nuclear power deal. Under AUKUS deal, Australia is all set to first receive at least 3 nuclear-powered submarines from the US. The allies will work together to create a new fleet using cutting-edge technology. Now, the setback is aimed to countering China's influence in the Indo-Pacific region.
And reports suggest that the Kremlin is clearing Putin's schedule for a potential G20 visit for the Russian president. Putin has not left Russia since launching an offensive against Ukraine in February last year. A Russian spokesperson said that the visit cannot be ruled out as Russia continues to participate fully in the G20 framework, but also added that no decision has been made yet.
That was all the global update that we had for you all this morning. But we're going to sip in a short break. Don't go anywhere because we'll be back with more domestic update after this break.